Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
If you're building a startup, you know every single dollar counts. That's why today we're diving into a really exciting update to a government incentive that can put cash directly back into your pocket. We're talking about the R&D Tax Credit, and trust me, you're going to want to hear this. So let me just ask you this. What if you could take all that money you're already spending, on developing your product, your software, your internal processes, and get a chunk of it back from the government as called hard cash? And here's the absolute kicker. You can do this even if you're not profitable yet. Yeah, you heard that right. For so many startups, this is the biggest hurdle, and it's why a lot of founders just assume this amazing tool isn't for them. But that has all changed, and I mean it's changed in a huge way. All right, so first things first, what exactly is this credit? Well, at its core, it's basically the government's way of saying, hey, thanks for innovating. Here's a reward to help you keep doing it. It's designed to encourage companies, big and small, to push the boundaries. So officially, the R&D tax credit is an incentive that lets you reclaim a part of what you spend on research and development. Just think of it like a direct reward for all that hard work you're putting into creating something new. It's money you can use to lower your tax bill.
But this brings us right to that classic startup problem. You know the one. The thing that for years made this credit feel like it was completely out of reach for new companies.
An income tax credit is awesome if you actually have income tax to pay. But let's be real. Most early-stage startups are pouring every penny back into growth. They've got tons of expenses and little, if any, profit. That means no income tax. So a credit against a tax you aren't even paying, it doesn't help your cash flow today, right?
And for the longest time, this made the credit feel like a distant promise. Something nice to think about. For the future, the benefit was there on paper, but you couldn't actually use it until you were profitable, which didn't help when you needed to make payroll next month.
But then everything changed. A really smart provision was introduced that allowed startups to apply the credit against their payroll taxes. And since pretty much every startup has employees and pays payroll taxes, this was a total game changer. Suddenly, the credit wasn't a future promise anymore. It was an immediate cash benefit you could get quarter after quarter.
Now, this payroll tax offset was already an incredible deal for startups. I mean, it was fantastic, but thanks to some recent legislation, that fantastic deal just got twice as good.
The change is actually pretty simple, but it is so powerful.
Before, a startup could use the credit to offset up to $250,000 in payroll taxes each year. But then, the Inflation Reduction Act of 2022 came along and, starting in 2023, it literally doubled that limit.
That's right, the new annual limit is now $500,000. Just let that sink in for a second. For a growing startup, a potential cash flow boost of that size is, it's nothing short of transformative.
So how does this actually work? How do you get to that big number? It's pretty cool. The law now lets you apply the credit against two separate parts of your employer payroll taxes. You can apply up to $250,000 against the Social Security tax part, just like you could before. But now you can also apply an additional $250,000 against the Medicare tax portion. You add those two together, and voila, you get a total potential offset of $500,000 a year.
Okay, a $500,000 benefit sounds amazing, I get it. But that leads to the next big question, right? What kind of work actually counts as R&D? A lot of founders hear R&D, and they immediately picture scientists in white lab coats. But the reality is so much broader than that.
And that's the key takeaway here. The tax code's definition of R&D is way more generous than most people think. You don't have to be curing a disease or building a spaceship to qualify. A lot of everyday product development and process improvements can totally count.
So, the IRS has this 4-part test to see if your work qualifies. It's actually pretty straightforward. First, are you trying to make a new product or process, or just make an existing one a lot better? Second, when you started, was there some technical uncertainty about how you were going to do it? Third, did you go through a process of experimentation? Testing different ideas, running simulations, good old trial and error? And fourth, is your work based in hard sciences, like engineering, computer science, or biology?
Let's make this real with an example. There was a company that makes phone cases. Doesn't exactly scream high-tech lab, right? But they qualified. Why? Because they went through a systematic process of testing different polymer blends and different internal structures to figure out how to make their cases better at absorbing shock. That process, it checked all 4 of those boxes.
So you're listening to this and you're thinking, hey, I think we might actually qualify for this. Awesome. So how do you actually claim the credit and get that cash for your business? Let's walk through the key steps.
Okay, the whole process really kicks off with an R&D study to pinpoint exactly which activities and costs qualify. Now, the absolute key here, and I can't stress this enough, is documenting your process as you go. You need to prove your work meets that 4-part test. After that, you'll file a form with your income tax return to figure out the credit amount, and then another form each quarter to actually apply that credit to your payroll taxes.
And hey, one more thing. Don't just stop at the federal level. Most states have their own R&D tax credits too. This means you can often stack a state benefit right on top of the federal one. It's like a bonus on top of a bonus, which means even more cash back for your startup.
So to bring this all home, this is the big picture. The immediate cash flow opportunity for startups that are innovating has literally doubled. It went from $250,000 a year to $500,000 a year. That is a massive shift that can help you find new hires, speed up development, and seriously extend your runway.
Which really just leaves us with one final question for you. You are already doing the incredibly hard work of building something new, something better. The only question is, are you claiming the full financial reward you've earned for doing it? If you haven't looked into the R&D credit lately, now is absolutely the time. Thanks for tuning in.